Has the real estate market had the same cold start to the year that Denver has? Well, it's time for the February market update. Hey everybody, it's Alyson with Live South Denver, your real estate strategist and realtor for the South Denver area. We're going to jump right into our month-over-month numbers that we always talk about. Stay tuned because at the end, we're going to look at week-over-week numbers. They're going to be incredibly valuable, and we're going to wrap it all up by talking about what some of the builders are seeing going on in the market. Buyers put 3,200 homes under contract in January. That's just a 10% drop from last year, and it's up 49% from year end. We saw 2,000 homes close in January. That's down 30% from a year ago and down 25% from December. 2,800 homes hit the market in January. That's a drop of 19% from where we were last year, but it is an increase of 68% from the end of the year. We finished up January with 3,900 homes available for sale, which gave us about 1.94 months of available inventory. So we are officially still under 2 months of inventory in the market, taking an average of 46 days to sell a home, which is 20 more days than it took this time last year. However, that 46-day average is only 3 more days than it was taking in 2019 and 2020 in January. The median days on market is 35, and that is only 5 more days than it was taking this time last year. Something you may find interesting, the single family homes have both a longer median days on market and average days on market than condos and townhomes. Okay, on to prices, everyone's favorite part. The list price to sales price ratio is 94.5% for January. That's right on par with where we ended the year. However, it is substantially lower than where we were in January of last year, which was 101.5%. which shows that it's easier for buyers to get a deal right now than it was this time last year. The average closed price for all homes is $617,000. This is down $15,000 from the month before, but up 2.8% from the previous year. Single family home prices are averaging $692,000. That is down $28,000 from the previous month, but up 1.9% from 1 year ago. $444,000 is the average sales price for condos and townhomes. That is down $20,000 from the previous month, and it is actually a drop from the previous year by 1.2%. That's also the first decrease we've really seen of any substance in a while in the condo and townhome segment because they were holding their own and even increasing their month-over-month pricing for quite a while. All right, flipping over to those median home prices. The median sold price for all homes is $535,000. That's down $19,000 from the month before and a drop of just 0.9% from January of last year. $590,000 is the median sold price for single family homes. That's down $10,000 from the month before and just a 0.8% drop from January of last year. The median price for a condo or townhome was $390,000. That's down $15,000 from the previous month and a drop of 2.2% from this time last year. So again, fairly substantial drop in the condo and townhome market, which we haven't seen for a while. So what are your takeaways? Well, I don't think we're going to continue to see these downward trends in pricing continuing into the year for many more months. Here's why. This snapshot that I gave you of January looks overly cold, if you will. Some of these segments might have looked a little bit better than last year, but overall they didn't look that great compared to year end. And we know that the end of the year certainly didn't look that great at all. But in reality, January heated up in a big way, and that is continuing right on into February. Mortgage applications were up 15% overall for the month of January. In fact, for 1 week, they were up 25%. They pulled back. So when we look at the month as a whole, they were up 15%. And buyer activity kept pace right with that. Here's where I want to look at that week over week data. I think it will give you a much better set of insight into the market and where we're headed. These trends are much more on point for where the market is today and where it's going than this month snapshot I've just shared with you over these last couple of minutes. So week 1 of January functions as our baseline. So when we look at week 2 of January, there were 81% more showings than in week 1. Under contracts went up by 62%. Inventory fell by 6.9%. New listings were up 150% week over week. And even with all that new inventory, our available inventory still fell because how many people were putting homes under contract. By the end of week 2, so mid-month in January, our available inventory was down to 1.5 months. By week 3, the number of showings it took to get a home under contract was down to 14 versus 16 from the week before. Our inventory shrank another 2%. And we had another 6.2% increase in the amount of homes that had gone under contract. Last week of the month, inventory drops another 3.9%. Buyer activity and under contracts go up another 7%. And our available inventory drops down to 1 month. So we're in February because it takes them a week into the month at least to get the data out. So my week over week data for the first week of February tells us that under contracts have gone up another 11%. Now we are below 1 month of inventory. Now, if you've watched my market updates for any length of time, you know that we spent nearly 2 years straight in the Denver market with less than a month of inventory. And during that time, it was bidding wars, multiple offers, just an aggressive time for buyers to have to be chips all in to get a home. Well, we have what feels like a lot of inventory on the market at times, but most of it is not great. There's homes that have been sitting there for a long time, which is why that average days on market is so high. But every time something new comes on, if it's good, there are so many buyers that want it. That's where this intensity is coming from. So when we're talking about our available inventory, and we're looking at like fresh inventory, there's just not a lot. Yeah, there's stuff that's been on the market for 90 days, 120, 200, 75, but everybody's seen it. We're waiting on those sellers to get their marketing right, to get their brain right, to get their pricing right, and then it might be worth taking a look at again. But everything that's fresh in that first week, there are so many buyers for so little of that good inventory. And that's where the intensity of the market is at right now. Denver is not even in its peak buying season. It will not be until after we pass Super Bowl and pass President's Day weekend, and sometimes even turn the corner into March. But after that, it's gonna be off to the races. So if you have been sitting, waiting on the sidelines, thinking it's going to turn into be a little bit more buyer friendly, it is not going to do that unless there are some outside forces that come in and shift the market again. So I just don't want there to be kind of any surprises for you. The market may still net out as my last month's predictions say at the end of the year with only a 3% growth. That's possible. But in this early part of the year, it looks like it's going to still be a pretty hot market with buyers having to put their best foot forward and sellers who come into this low inventory, low fresh inventory market really having a strong leg to stand on. Okay, on to the builders, because there are so many folks who are really wanting, desiring new construction home. What does the builder side of things look like? I reached out to many of my builder colleagues and I've got 5 different perspectives here for you. Here's what one of the builders said. We are holding our prices fairly stable and we are giving incentives to offset what are above average interest rates to keep buyers feeling comfortable with the market. Another builder said, we are still being impacted by slightly above average interest rates. However, our sales velocity, our traffic, everything has picked up since New Year. So we are seeing buyers get back to normal and find that the market that we're in with interest rates is probably not going to change. This builder has chosen to increase their buyer financing incentives to keep the traction going and keep buyers incredibly interested in what they have. Third builder says we are seeing increased traffic from buyers and we have not lowered our prices since January. Sales for us are at a desirable pace for a balanced market for our sales and production team. We've actually been declining offers from some buyers for being too aggressive against our profit margins. We have been accepting some offers that have included freebies like maybe a fridge or washer and dryer included, but nothing that's too aggressive or crazy. And this builder said they are continuing to offer rate buy downs as an incentive. Builder number 4 says we are seeing our volume of buyer inquiries return to normal levels, and they are pulling back on their incentives and discounts so that they can get profits back to where they have been. While they're not there yet, they are steadily and slowly increasing the base prices on their homes, and they're using the communities with the highest interest and strongest demand to get there the fastest. And they are getting back to bidding war situations where there is more than one interested client on a specific home or lot. And last, the 5th builder said that they are anticipating a softer than spring season than they've been used to over the last couple of years. However, they are seeing a lot of demand still from the out-of-state client who's moving here for a job or lifestyle relocation. Another thing they're seeing that is a shift for them is fewer clients wanting to build from dirt and more of them wanting to do a quick move-in home where they're moving in within several months rather than a year out. They did say though that the last several dirt builds that they've done have been on their most expensive lots and some of their highest priced homes ever. This builder, like the others, does continue to offer incentives, but we do see shifts in just how large these are. Every builder was confident in telling me they're continuing to expand their inventory and their footprint. They're opening new communities, they're continuing to build, they're not pulling back on home availability. As you could tell from what they shared, there is some variability in what they're doing with incentives. Some are pulling back, wanting to get back to their level of profitability. Some are more concerned with keeping the flow and the pace of building going and are continuing their incentives and in some case increasing them. The consistent message that we can certainly see here is they feel very bullish about the market moving into spring and summer. There is not a lack of confidence with the builders in the big picture. These builder updates absolutely should not scare you into buying a home today. You should not feel the pressure to rush out and think that you're getting the very best deal. As always, as I've said before, you'll get the best deal on a quick move-in home that is finished and they haven't sold yet. However, again, same as with the existing home market, thinking that you can wait and wait and wait and something even better is going to fall in your lap, that's not necessarily the case. If you find a home that you like, that fits your time frame, that fits your budget and fits your style, then you probably should jump on it. I can't say there's going to be some large swings in the market with the builders. If you have questions about the market, you want to talk in more detail, want to get specifics or down to a granular level for an area that you are looking at, I would be happy to speak with you. Please reach out and I will see y'all next week.